We are excited to finally announce the results from the 2012 Kentucky Equine Survey today, and thank you for coming to listen and to support this effort. This study was a joint effort between the University of Kentucky, the Kentucky Horse Council, and the National Agricultural Statistics Service. And we have members of each of those organizations here, and I'm very thankful that they could all come. This project was made possible by $200,000 in seed funding from the University of Kentucky's College of Agriculture, Food, and the Environment, a $300,000 grant obtained from the Governor's Office of Ag Policy, thanks to the efforts of the Kentucky Horse Council, and $100,000 in funding spearheaded by the Kentucky Horse Council and numerous other very important partners to the University of Kentucky and to the Kentucky Horse Council. Some of you might have received a handout with the summary of the results from this project, and the discussion that I'm going to lead here will follow that handout. On our website, which I believe is going to go live at 1 o'clock, we have a PDF of the full report as well as a multitude of supplementary materials, including detailed technical methodology, complete county-level estimates, and a complete list of all of our generous organizations and individuals who contributed financially to this effort. Back in January, the state-level results from the inventory phase of the study, conducted by the National Ag Statistics Service, were released. These results appear on the interior of the handout, and I'm just going to touch on the highlights as we've already reported them. It was estimated that there are 242,400 equine in Kentucky, residing on 35,000 operations. The most prevalent breed is the thoroughbred, followed by quarter horses and Tennessee walkers. The primary use of equine in the state is pleasure or trail riding, followed by breeding, and then horses who are just hanging out in the pastures. We also reported results earlier on the value of all equine and equine-related assets, sales, income, and expenditures on equine operations, and you can find all of those details in the handout. But the reason that we have called this press conference today is that we now have available not only county-level inventory data, but also the economic impact results. The county-level data are very interesting to look at, to examine different clusters around the state. And if you'll look in your handout, there's a nice illustration of the state of Kentucky with 120 counties that shows the distribution of horses in the state. Those data are quite detailed, and since I think today the main interest is to focus on the economic impact of the equine industry, we'll go ahead and move forward to that. But if anyone is interested in the full county level data, we have some of that available in the full report that's available on the website, or will be at 1 o'clock. And we also have a file that has every single piece of information that you might want available. But for now, if you'll turn to the back page of the handout, we'll focus on the results from the economic studies. The results from the 2012 Equine Survey indicate that the total economic impact of the equine industry is $2.99 billion. This figure includes direct effects, which are the sales of goods and services directly attributed to the equine industry, as well as indirect and induced effects, which are the economic activities associated with other industries which support the equine industries. Some people will call these spin-off activities, or maybe even referred to as being part of the equine economic cluster, as well as income spent by employees who work for those businesses. And those are calculated through the use of something that we call a multiplier. Just as an example, I own a horse and I have to pay for veterinary services. That is an example of a direct effect. But the vet that I go see has to buy certain items like syringes, needles, gloves, vet wrap, in order to provide those services. So expenditures on those goods are called indirect effects. And then the employees at the vet clinic and the employees at the vet clinic or the veterinary supply store, they earn wages and they spend the money that they earn. Those are called induced effects. So a multiplier is used to capture those indirect and induced effects. And the result is that $1 of sales in the equine industry results in more than $1 in sales in the state's overall economy. In this study, as you'll see in the handout, the direct economic impact is $1.78 million, and the total economic impact, which includes the direct, indirect, and induced effects, is $2.99 billion. There are other ways to measure economic impact. Another common one is through the creation of jobs. The operation inventory study that was done with the National Ag Statistics Service showed that a total of 13,000 part and full-time workers were employed directly on equine operations. But when accounting for other types of non-farm positions in the equine industry, as well as positions generated by spin-off activities or in the equine cluster, the study showed that the equine industry was responsible for creating 40,665 jobs. And another result you'll see in that handout is something called the value-added effect. This is another way to measure economic impact. Now, the most common measure that you'll hear is the output effect, which is that 2.99 billion figure I reported earlier. That's basically a measure of revenue. The value-added effect also takes into account the cost of production. So in that sense, it might be a more descriptive measure of economic impact. The value-added effect is a measure of profitability and new income paid to workers. The total estimated value-added effect is $1.4 billion. And I have to note, please realize that you cannot add the value-added effect to the output effect. The value-added effect is one component that goes into the output effect. So let me illustrate this distinction through the use of a simple example. If I buy a horse for $1 million and sell it for $1,001,001, then the output effect would be $1,001 multiplied by our multiplier. However, the value-added effect would only be my profit from that sale. $1,001 minus $1 million, I can do that math today, $1 multiplied by the multiplier. So while that value-added effect is smaller, you can see that it might be more descriptive of the overall impact of an industry because it measures profit and new income. You'll also see in that handout that economic impact by sector, economic impact is broken down into 5 sectors in the equine industry, led by the racing sector with a total economic impact of about $1.28 billion, followed by breeding at $710 million, competition at $635 million, recreation at $166 million, and then all other sectors that we couldn't categorize into one of those areas were combined at an economic impact of $194 million. The handout that you have also details the employment and value-added effects as well. The tax impact of the equine industry to the state of Kentucky was approximately $134 million, which includes tax revenue collected from state income and sales taxes, but does not include occupational license tax revenues. Finally, we conducted a non-market valuation study to obtain an estimate of Kentucky residents' willingness to pay to preserve the rural landscapes that are part of the equine industry. This non-market valuation is a tool used to estimate value for something that is not normally traded on the market. So when we have markets, we have prices, and it's easy to estimate value. But when something's not traded, we can't do this, and this is a tool that we can use. In this case, we're estimating the value for the environmental, recreation, and maybe mostly aesthetic benefits of the rural landscapes that accompany the presence of the equine industry. This study was administered to over 8,000 randomly selected Kentucky residents across the entire state. Our study found a positive perception towards the equine industry in general, and that about 70% of the respondents were willing to pay some additional amount every year in taxes to preserve horse farm land as an alternative to having that land developed. Almost half of the respondents were willing to pay at least an additional $50 a year. These results suggest that from the perspective of the average Kentucky resident, the equine industry's presence is a valuable part of Kentucky and is worth preserving. In closing, I would like to recognize the monumental team effort it took to complete this project, and it couldn't have been accomplished without each part of the team. Our colleagues at NASS were instrumental in their services to conduct the inventory portion of the project. Without the Kentucky Horse Council, there would have been no grant from the GOAP or nearly the statewide reach in promoting the survey. Numerous important industry organizations and individuals united from all parts of the industry to not only request this project, which actually happened long before I ever arrived here at UK, but also to help fund the project and provide names and addresses of equine operations across the state to help improve the quality of the data that we got. And finally, I am indebted to my colleagues at the University of Kentucky. I may be the spokesperson for this project, but it took a small army of administrators, faculty, staff, and grad students at UK in a number of different departments, including ag communications, ag economics, animal and food science, and of course, ag equine programs, along with their own many talents and gifts to complete all of the studies, analyses, and reports.